The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Happy Monday. Hope you all had a great weekend. Welcome to another edition of Breakout Investing on TFNN. The phone number to use if you want to talk to me, give me a call, talk about this market, 877-927-6648. You can catch my show Monday through Friday on TFNN from 3 to 4 Eastern. If you can't listen live, be sure to check it out on iTunes. You can download the podcast over there. And don't forget, you can listen to all TFNN programming on your smartphone wherever you are. Just type in tfnn.mobi in your smartphone browser, and you can get the stream that way as well. And Tiger TV is a cool feature on the homepage of tfnn.com. If you want to listen to the show live, you can do that on Channel 1. With Tiger TV, you can look at charts live right along with me. So show is carried live on Channel 1. It is archived in Channel 13. Folks, don't forget about the Great Panther Silver Halloween giveaway. That's going on October 29th, 30th, and 31st. Your chance to win a free, beautiful piece of silver from Great Panther Silver. This is the Halloween giveaway. So October 29th and 30th between 9 a.m. and 6 p.m. Eastern. We will give away to a lucky listener each hour a half-ounce piece of silver. And then Halloween Day, October 31st, I believe that's a Wednesday, again, from 9 a.m. to 6 p.m. Eastern, every hour a listener will win a free 1-ounce silver coin. So all you have to do is register right on the homepage of tfnn.com. Great Panther Silver Halloween giveaway. Good stuff. All right, wanted to take a look at a chart of Apple before we go through the indices here. Apple in rally mode today, up $16.80. 2 3/4% move for Apple today to 626.64. Looks like a dead cat bounce for now. Not a whole lot of volume behind the move today. Of course, Apple coming out with earnings later this week on Thursday. And earnings are expected to be up 26% from a year ago to $8.85 a share. Sales up 28% to $36.2 billion. Of course, Apple tomorrow on October 23rd has a press event scheduled where we're likely going to see the new iPad Mini with a smaller screen from the regular-sized iPad. We could also hear news about a revamped iTunes store, I'm hearing as well. So press event tomorrow for Apple. Earnings on Thursday. Stock still looks vulnerable here. The issue with Apple is that you got a lot of big investors getting out of this stock starting in late September. So you got a lot of heavy volume behind declines, and then a low volume rally today really doesn't strengthen its technical picture any. Apple still trading right at its 100-day moving average at 625.81, still underneath its 50-day line at 661.57. 877-927-6648. Let's talk to Fish in Riverview, Florida. Wants to talk CHS, I believe. How you doing today, Fish?
Good, Ken. How about you? I'm
fine. No complaints.
Good. Hey, I love your show. I listen to your podcast every evening.
Appreciate it. Thank you.
I probably jumped the gun a little bit. I bought Chico's and LinkedIn on Friday, and
okay.
I'm looking for a stop. Your thoughts on stops on those two stocks?
Yeah, so, CHS, Chico's Foss, women's retailer, very well-run company, one of my favorite retail names out there, actually. To its credit, one of the few growth names out there that's still holding above its 50-day moving average. So the stop, the 50-day line for CHS is at $18.32. Where are you in the stock? Are you in right around this price, a little bit higher? What's your purchase price?
Wow, I don't recall. I think on LinkedIn, I think I'm about at the price it's at now. I was at about 106 on LinkedIn, and on Chico's, I can't recall exactly.
So you're probably around 19. If you bought on Friday, probably maybe 19. So you're down maybe 50 cents on it, something like that.
Yeah.
Yeah. All right. Well, the key support level right now for Chico's would absolutely be its 50-day moving average. I have several holdings in my Ultimate Growth Stocks model portfolio, many that were holding above the 50-day moving average. I started to see sell signals in some, and I actually took profits before they undercut their 50-day moving average, but I wanted to give some other room. But those that are kind of coming below that support level, especially with volume, I'm cutting them loose, because once a stock violates the 50-day moving average, it doesn't necessarily mean it's doomed, but it's a technical sign of weakness. And in this market with major averages under distribution still, it's just a very difficult environment making money in growth stocks. So 50-day moving average for Chico's at 1832. I would say, a stop 17, between 1750 and 18, something like that. It's really just about how much you're comfortable. Sometimes a stock will undercut the 50-day line and by maybe 25 cents or so, and then it'll start to firm up again. So you want to give it a little bit of room. If the 50 days at 1832, I would do it between, say, 1750, 1775. Why don't we say that for LinkedIn?
1750. Oh. Could you say that again? That was
for CHS, $17.50 to $17.75.
Great, thanks, Ken.
Okay, and then for LinkedIn, see, LinkedIn, you've got a more troublesome stock here. I'd be careful with this, because the fact that it cut below its 50-day moving average, not last week but the week before, to me it brings a possible trip into its 200-day moving average, which is right around $100 a share. So if you probably bought Friday, say, 106, 107, something like that.
About right. 106 is about right.
Yeah. So you've got now it's at 107 right now, so you've got a little bit of a cushion. This one, I would probably set a stop 5% underneath what you paid for it.
Okay. Thanks a lot, Ken. Really appreciate all your help.
All right, Fish. Appreciate it. Thanks for the call. Thanks for the comments.
Thank you.
All right. All right. Two good stocks there: Chico's FOSS and LinkedIn. Growth stocks like this. Growth stocks in general, really all stocks in general, are vulnerable when the general market is under distribution. So my strategy right now with my Ultimate Growth Stocks newsletter and model portfolio is I am treading cautiously. I have I think 4 or 5 stocks in my portfolio right now that are still holding support. Some are nicely profitable positions, but I'm aware that this is a market that is vulnerable. Absolutely vulnerable, and it's going to take a little while for a new uptrend to start. Whether that happens in coming days or several weeks remains to be seen, but a lot of damaged charts out there that need some time to repair. Next up, Titusville, Florida, staying in the state of Florida. We're going to go to Nick, wants to talk AOL. Greetings, Nick. How are you, sir?
Fine. Yourself, sir?
Excellent.
Are you going to watch the debate or watch the ball game?
It's a dilemma, because you got Monday Night Football, you got Game 7 of the Giants and the Cardinals, and then you got the third debate in as many weeks. I'm kind of debated out, I got to tell you. So yeah. I'll probably check in from time to time, see what the candidates are talking about, and watch a little football and baseball as well.
That's quite a quandary. That's worse than the stock market.
Yes, it is. I agree.
Okay, so AOL, I'm looking for an entry point.
All right. Well, pretty bearish price action in the stock today. Doesn't look like it hit a high of 37.83, a low of 35.95. Pretty much trading at a session low right now. The good thing is that there's not a whole lot of volume behind the decline. To me, the entry point here, Nick, would be the 50-day moving average. Its price action tells me today that a trip to the 34.50 level is probable, a likely scenario at this point. So I would not buy it here. But if it does pull back a little further, 34.50 would seem like a likely resting point, and that's an area where it found support in September as well. So I would look at that 34.50 area And yeah, that's what it looks like to me right now.
What about the gap in the end of July there?
End of July, right, when it broke out of a base. I mean, you're talking all the way down around $29 a share, huh?
Because that was right on the line also.
Yeah, I think it would take a pretty severe market pullback, for AOL to get back down to that 29. If it comes down to the 34.50 level and breaks through there, there's still pretty strong support in the 32 area.
Right.
So that it would take. It's possible. I mean, this distribution that we're seeing in the market. I mean, if Facebook and Apple and Amazon this week really come out with crummy results, and it brings more sellers into the broad market, a name like AOL likely will break below its 50-day moving average. If it does, 32 would be the next support level, and then underneath 32, then you'd be looking at that gap down around $29 a share. So,
okay, appreciate it. Terrific show.
Okay, Nick, thanks very much.
You're welcome, sir.
Have a good day. Another good stock here, and AOL. A lot of growth names have broken below their 50-day moving averages. That's what I mean when I say there's a lot of broken charts out there. And just because a stock breaks through support doesn't mean it's doomed to be a laggard stock forever and ever and ever. It just means that it's ready to base, and some of these stocks are going to come in 10, 15, 20%, maybe even 25, 30% off their recent highs. Then they'll start to bottom out and form the bottom of a base, and then start to move higher and build the right side of a base, and then that's typically where your new leaders come from. So just remains to be seen. Let's just check in on the major averages here and see what these indices look like here. We talked about Apple moving nicely today. NASDAQ Composite right now is virtually unchanged. It's up just a fraction to 3,005. It did dip below the 3,000 level today, hit an intraday low of 29.95. But this is still an index right now. We're basically looking for the first day of a rally attempt, and if we do close higher, 1 point higher, 2 points higher, 5, 10 points higher, it's day one of a rally attempt. So that means we don't pay attention to day 2, don't pay attention to day 3. Then the fourth day of a rally attempt, which would be, what would that be, Thursday? If we end higher on the NASDAQ today, if we see a big percentage gain Thursday, or Friday, or sometime next week, we'd have some follow through and an indication that the market trend might be ready to turn upward again. But NASDAQ right now is still troubled, still under a lot of selling pressure, still under a lot of distribution. We had options expire on Friday. NASDAQ volume was 2.18 billion shares. We're tracking about 30% lower than that today. So, so far so good with the NASDAQ. That's being helped a lot by shares of Apple. All right, folks, always appreciate the phone calls. Got this show off to a good start today. We're coming back in about 3 to 4 minutes. You're listening to Breakout Investing on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. Before we went to break, we checked in on the NASDAQ Composite, slightly positive on the day, but still flirting with its 200-day moving average here at 2970 thereabouts. The tech index right now trading around 3006 thereabouts. So it hasn't broken through the 200-day yet, but tech stocks bouncing back a little bit today thanks to strength in Apple ahead of its earnings report Thursday. It also has that press event scheduled for tomorrow. Mentioned volume on Friday, very heavy due to options expiration. NASDAQ volume on Friday topped 2 billion shares, close to 2.2 billion. So we're tracking about 25% lighter than that today on the NASDAQ. Let's check in on the S&P 500. NYSE volume on Friday was about 915 million shares. And let's see here. 915 million shares on the S&P 500 today. We're tracking about 35% lower than that. So S&P 500, underneath its 50-day moving average here, it has been trying to find support at the line. It suffered a big percentage decline on Friday, basically closed right at that 1434 level, which is where its 50-day moving average. Right now it's down about 6.5 points to 1426. So S&P 500 looking a little bit vulnerable, not clear it's going to be able to hold on to that 50-day moving average. And the Dow Jones, same situation. closed right at the 50-day moving average on Friday. It is down 66 points right now to 13,277. Crude oil today, 88.73 a barrel. That's the official settle, down $1.32. Gold futures ended at 1726.30 an ounce. That's gold for December delivery. It was up $2.30 on the session. Let's take a look at GOLD. This is a UK-based gold miner with significant operations in Africa. You can see it's really has been immune to selling gold. Randgold Resources continues to catch a bid here. Weekly chart is very interesting with Randgold here. Just looking at a stock that continues to hold up quite nicely in an unsettled market. Here's the weekly for Randgold, still holding above its 10-week moving average here at 117. That looks to be key support at this point. U.S. dollar index up today, but not by much, only up 2 ticks to 79.64. Yield on the 10-year note up slightly to 1.8%. The 30-year bond at 2.95%. We'll see what the VIX is up to today. Probably not seeing a whole lot of movement in the VIX. But let's see where we're at here. The CBOE Volatility Index. Look at this, kind of bumping up against that 200-day moving average. That's this red line right here. So you had a big move in the VIX on Friday when the market fell apart, massive distribution, and the VIX today is up another 2.5% to 1750. Its 200-day moving average is at 1787. The VIX hit an intraday high of 1798. So it barely crossed that 200-day moving average, but it is now back below that area that could be resistance for now. Some headline stocks today. Let's take a look at Ancestry.com. A cool product, online genealogy, family tree. Shares of Ancestry.com gapped up today 7.8% to 31.45. An investor group led by European private equity firm Permira agreed to pay $32 a share in cash for Ancestry.com. The deal is valued at $1.6 billion. Here's a look at Pfizer. It announced a small acquisition earlier today. It's buying privately held NextWave Pharmaceuticals for $680 million. There will be an upfront payment of $255 million to upfront payment of $255 million to NextWave, plus an additional $425 million based on sales milestones. Pfizer down a little bit on the news, not by much, close to 1% to 25.51. It has been obviously an exceptional price performer in the market, along with a lot of other big pharma. NextWave is currently developing products that used to treat attention deficit hyperactivity and other central nervous system disorders. Earnings news today. We had results from Caterpillar, CAT. Earnings were up 49% from a year ago to $2.54 a share. Sales up 5% to $16.4 billion. The sales missed estimates. Shares of Caterpillar up 1% today to 84.71 after hitting an intraday low of 82.29. We'll talk a little more about Caterpillar when we come back. We'll be back in about 4 minutes. You're listening to Breakout Investing on TFNN. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone. 877-927-6648. Finishing up thoughts on Caterpillar before we went into the last break. Stock is trading higher, up off its lows, now up about 0.9% to 84.58. Still a challenge stock here technically. It's trading underneath its 50-day moving average at 86.70, way underneath its 200-day line at 94.95. So this is a classic example of a stock that's going to have a lot of overhead supply to work through if it attempts to rally from here. Mentioned the earnings and the sales growth. The earnings beat expectations handily, but sales growth disappointed. And for 2012, Caterpillar forecast earnings of $9 to $9.25 a share, below its prior forecast of about $9.60 a share. The current consensus estimate is at $9.41. So lukewarm earnings guidance. It also forecast 2012 sales of $66 billion. Also below estimates and below its earlier guidance of $68 to $70 billion. So all around, Caterpillar, a lot of people saying the stock is on sale here. I am not so sure. Also, Freeport-McMoRan, FCX. Freeport-McMoRan, of course, copper and gold producer. Down today, down 1.9% to $40.38. It is still holding above its 50-day moving average at 38.57. Earnings down 22% from a year ago to 86 cents a share. That was 13 cents above the consensus estimate. Sales down 15% to $4.4 billion, slightly ahead of expectations. Freeport-McMoRan down Friday. It is extending losses today. Also, we have a coal miner here, Peabody Energy Group, BTU. Good day for BTU. Shares up 11%. Wow, look at that. Big sellers in the stock on Friday. Apparently they changed their mind because the stock is up 11% today to $28.74. Earnings down 47% from a year ago to 51 cents a share. That was well ahead of the consensus estimate of 34 cents. Sales growth also above expectations, up 4% to $20.6 billion. Estimates were for 19.7. I think I have that right. I know the sales were at 20.6 billion. I believe the estimate was 19.7, so also ahead on sales there. Also, VF Core, VFC, this is a well-run company. Boy, has it made a big price move in recent months. Finally taking a hit today, down about 4.7% to 159.01. This is stock you see here, a big breakout in July. Over 143 bucks a share. Runs up to close to $170 a share, but it gapped down today. The numbers weren't too bad. The company raised its full-year outlook. They also raised their dividend, but the company's sales came up short. Its North Face business is struggling a little bit in Europe, and North Face is makes up, out of all the brands the company has, North Face is the biggest one in terms of sales. Earnings at VF Corporation up 23% from a year ago to $3.52 a share, 3 cents ahead of estimates. Sales up 14% to $3.15 billion. That was slightly below expectations. About 20% of VF Corp's sales come from Europe, and sales growth has been decelerating sequentially there for a couple of quarters in a row now. In the first quarter, sales were up 16% from a year ago. Second quarter sales up 14%. This time around, they slowed sharply. In Europe, up only 3% from the year-ago quarter. So VF Corporation, to its credit, gapped down today, but it is still holding its 50-day moving average at 157. So we'll see if it can find support there. Also wanted to take a look at Facebook. Facebook comes out with earnings tomorrow after the close. You think this company is going to be held to a high standard tomorrow? I think investors and Wall Street mutual fund managers are in a situation now where it's show me the money for Facebook. Earnings expected to come in at 11 cents a share. That would be flat from a year ago. So no earnings growth expected from Facebook after the close tomorrow. Sales should be up 29% to $1.23 billion. That's pretty good top-line growth. The problem is that sales growth has been decelerating for several quarters in a row. And here's a stock still. I mean, it's pretty amazing. Facebook comes public earlier this year, hits an intraday high of 45. The stock is more than 50% off of that high, and yet it is still selling at 66 times trailing earnings and 31 times forward earnings. That is still surprising. I mean, this is a stock that still gets a premium multiple. Now, they have 1 billion users, no question about it. About 600 million of those users are on mobile, but this is the problem. Advertisers are not going to pay the same rate that they do on PCs as they do on smaller mobile devices. And Facebook has said they need to, since more than half of their user base accesses Facebook on mobile devices, they need to figure out how to monetize growing mobile use. And they haven't been entirely clear on how they're going to do that, and as a result, the stock has been just one big mess. It is up 26 cents today, 1.4% to 19.26, but a lot of technical damage done to Facebook, and rightly so. When there's uncertainty in a stock and there's just no earnings visibility, that is a problem, especially when you're a high multiple stock. So hopefully, the news will be better than expected from Facebook, but you have to wonder with IBM coming out with the earnings that they did and Google last week. I mean, these big, bellwether high-tech firms just not delivering the results. It's going to be a tall order for, Facebook to come out with numbers that are going to impress Wall Street. It's possible, and we'll keep our fingers crossed because tech stocks could sure use some positive sentiment at this point. So we'll see what Facebook has to say tomorrow after the close. Let's check in on shares of Google as well. Google under a lot of pressure after reporting dismal quarterly results last week. It is working on 3 straight down days. A lot of institutional selling in this stock, no question about it. It's down another $6.17 today, almost 1% to $675.62. And you can see all the sellers in Google over the past 3 sessions. Let's check in on AMCX. This is a ticker you may not be familiar with. I'm not sure I've ever talked about AMC networks on the show before, but as you can see, it's working on 6 straight price gains, 6-session winning streak here. Nice, strong breakout recently, over $45 a share. Actually had a couple of swing points here, a $44 swing point, $45 swing point here. Either way, this is a stock that is clearly under accumulation. AMC Network's in the news because the cable network reached a deal with Dish Network, the satellite provider, to start carrying its programming again. AMC had been dark on the Dish Network since July. AMC is home to popular dramas on TV like Breaking Bad, Mad Men, and Walking Dead. So a lot of buyers in AMC Networks recently. And I'll tell you, heavy volume breakouts, they just have not really been around at all. But AMC is nicely higher today, out to extend its winning streak to 6 sessions. Let's also take a look at BCEI, Bonanza Creek Energy. I touched on this stock last week. They're based in Denver, small cap oil and gas producer. I like the way the stock is trading, and I also like fundamentals here. Very, very strong. See, Bonanza Creek is holding on a daily chart above its 50-day moving average. Let's take a look at the weekly chart. And we'll see just a nice technical setup here. Trying to break out over 2440, hasn't had much success yet. But again, the growth prospects at Bonanza Creek are worth paying attention to. In 2011, the company earned 33 cents a share. This year, 2012 full-year earnings expected to be up 345% to $1.47 a share. So, big growth expected this year. Next year, they should earn $2.59 a share. That would be up 76% from what's expected in 2012. So, like the growth prospects here, like the technical setup, a market under distribution is just not going to let these good technical setups run, but still, Bonanza Creek's price strength is worth noting. And again, it's a small company, market cap of under $1 billion. Not that far, though. It's about market cap of $960 million, and it does have pretty decent fund sponsorship. So a lot of well-known oil and gas producers out there in the large cap space. This is a small cap firm that is acting quite well. They came public in 2011, December 2011, at $17 a share, and right now trading at $24.18 in a good technical setup here. So at this point, that's how I'm going about kind of building my watch list. I have very little exposure to stocks right now in a market under distribution. My strategy says that is the best way to go about things. Most stocks are going to follow the market trend downward. Great stocks are going to go down, good stocks are going to go down, and bad stocks are going to go down. So you want to wait for renewed signs of institutional buying, wait for the market trend to turn upward again. When that happens, you can start making profitable trades. So you want to pay attention to stocks that have not broken down significantly. That is, that's a common pitfall of investors to just buy cheap stocks that have been hammered by institutional selling. Sometimes they just stay there and they never go back up. All right, next up, Claremont, Florida. It's our third call from Florida today. We're going to talk to Paul. How you doing today, Paul?
How you doing, Ken?
Good. I hope you hadn't been hanging on the line there too long. I just saw your name.
No, Jack, I figured you got carried away. You weren't looking at your screen.
Yes.
I was going to say my name.
I apologize. Well, you got that exactly right. I start looking at charts and I start talking about a stock. It's easy to kind of look down for a little while. But I appreciate you hanging on.
Citi. Yeah, are you in Citi, or were you in Citi a little while ago?
No. I've just been kind of following the financials. Citigroup's been. I was in the XLF, the Financial Select Sector Spider Fund. So I did have some exposure to with the ETF, but I have not owned any individual names in the financial sector. But Citi's been a strong one, no doubt.
Yeah, what do you see? You see this getting into the low 40s? I was talking to Tom last week. He says he could see a case for it to go into the 50s if it does a few things. But
again, this is it's going to need a strong, market. It's going to need improving market health to do that. Citigroup is not, going to do that if the major averages remain under distribution. Okay, because that's where we're at right now. We're in a market that's in a downtrend. The market tide is generally flowing positive, and again, it's just a tough environment for Citigroup to keep running. Now, it could if Apple, even if it's a different industry group, different sector, if we can get some follow through in the Nasdaq Composite later this week, and that brings buyers into the Dow, the S&P 500, Citigroup could continue its run. Do you own the stock right now?
Yeah, I've had this for since before the split. For 3 years, 3.5 years.
Yeah, well, I mean,
I bought it from $1.50 up.
Okay, so you got nice cushion. I mean, the trend is still upward.
It's time to unload it. I'm just looking for the low 40s now because I could have took big money out of it, like a few months after I got in it, but I didn't because I figured this was going to be a long-term play. Then they screwed us with the government and the reverse stock split, and with that split, it's never going to get to where it should be now.
Yeah. It's it's not doing anything wrong. It's not doing anything wrong. It's one of the stronger, definitely in the financial space. It's probably one of the strongest, if not the strongest, name out there. Good. So the question is does this recent pullback have more left? Because if it does, it's probably not going to spare any sector. If today. What's that?
It's rejecting the pullback for the last couple of days today, but
Yeah, it's acting well. It's not doing anything wrong.
Of course, the volume is going to start drying up a little too, because that was all earnings, related, all the volume going up. So it's kind of hard to compare volume when you're talking earnings driving everything, and then the rest of the next couple of months is just basic day trading and whatever you got. You know what I mean?
Yeah, I agree. Yeah, I absolutely agree. The swing point here was 35.25, and it's at 37.49 right now. And you're talking about a stock that is under, that remains under accumulation. So the case for the low 40s is a good one. I'm, again, you probably heard me describe myself as a top-down investor, so I pay attention to what price and volume and the major averages are doing. Without any follow-through, without any signs that a new market uptrend is going to start, I haven't seen anything yet. We could get a buy signal later in the week or sometime next week or even later. If we do get a buy signal in the market, Citigroup could keep going, but I'd be careful with it. I'd be careful with it because I'm just not keen on the market right now.
Yeah, it's got ripped down plenty of times, so I got to be careful.
All right, Paul.
Thank you.
Appreciate the phone call. Take care. All right, headed into the final break. Yeah, Citigroup, just a monster stock, continues to trade very well. Breakout Investing on TFNN, folks. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m., and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. Before we went to break, we were just finishing up a talk with Paul in Claremont, Florida, who's been long Citigroup for a while. He's got a nice tidy profit in the strong performing financial stock. Was wondering if it could make a run to the low 40s, and I think that's a distinct possibility if the broad market can regain some juice here. We are very early in a rally attempt for the Nasdaq. The S&P 500 is still the index never undercut its low. Let me pull up the S&P 500 here. Let me pull up a chart here. The rally attempt for the S&P 500 is still technically up. You know what? Actually, it's not. It undercut its October 12th intraday low today. So we're looking for an update for the S&P 500, an update for the NASDAQ, and then that'll start a new rally attempt, and then we'll look for some follow-through, 4 days or later into that rally attempt. So with the market still in a downtrend, I wouldn't be afraid to skim some profits here with Citigroup, because you never want to let a big gain start to dissipate. So let me show you a weekly chart for Citigroup. And if you've been listening to this show, I know some people use moving averages and others don't, but I use moving averages to help me take profits in a stock. Citigroup right now trading at 37.72. A fairly significant support level for Citigroup is 33.72. Call it 33.75. So if you're willing to give up a few points here, 3.5 points of profit in Citigroup, that would be a level that I would watch, 33.75. If it breaks below that with conviction, it's time to move on. If you don't want to wait that long, well, Citigroup's has other support levels to pay attention to as well. Its 10-day moving average is at 36.50. That's about a little more than a point below where it's trading now. Its 20-day moving average is at 35. Okay, and then you've got the 10-week moving average, or the 50-day moving average is right around 32.75. So you got support levels here to watch. I'm just not convinced. It's a stock that's under accumulation. What it doesn't have going for it is overall weakness in the broad market. Taking a look at the XLF, the Financial Select Sector Spider Fund. Again, this is not really flashing much in the way of sell signals. It hit an intraday low today of 1596. I thought this one had a chance for a breakout over 1644, but again, weakness in the broad market is kind of getting in the way here. Anyway, it's down a penny today to 16.10, so it's only about 30 cents away from that swing point. So financials are still looking pretty good here. It's just the overall broad market health is a bit of a concern. Let's take a look at Intuitive Surgical, ISRG, up 2.5% today to 551.64. Wild day of trading for the stock last week after the company reported earnings, but it's working on a 3-day winning streak now, and still not a stock that I'm interested in here. Intuitive Surgical, again, did report earnings last week, but sales growth has been decelerating at this company, and earnings of $3.54 a share were up 16% from a year ago, and sales were up 20% to $537.8 million. So earnings and sales growth isn't a problem for Intuitive Surgical, but the fact that sales growth has been decelerating in recent quarters is cause for concern, plus the fact that the stock is still pretty far off its 52-week high. All right, folks, coming up after the close today, we've got earnings from Texas Instruments, Western Digital, and Yahoo. We'll see what those companies have to say. Coming up next, the Tom O'Brien Show on TFNN. I'll see you back here tomorrow, 3 o'clock Eastern, for another edition of Breakout Investing. Have a great afternoon.